science of geometry probably had its start in Egypt, when the banks of the Nile would flood and farmers would have to reestablish their property lines. To do this, they'd use ropes and swing them in huge arcs to create fresh squares of land. It's important that we know the origins of our technical analysis methods and how to apply them without a computer. Now, we're not going to get ropes out, but if you're listening to me right now, you're probably staring at a computer screen. So let's look at the tools that we can use with a computer that we'll be using in the initiate level in our Geometric Traders Toolkit. The first tool that we'll be looking at is the % swing chart overlay. This will help us to identify levels of support and resistance where we can use our three other tools, which are the price retracement tool, the price extension tool, and the last one is the price expansion tool. We didn't talk about this one in the neophyte level, and it's not in the Gartley trading method, so this is fresh information for some of you. So now let's look at a chart and apply the % swing chart overlay. So I've created a workbook entitled Indices, so I'll open that. And what we're going to do is go over here to the FTSE. And I have my weekly chart over here and my daily chart over here. Let's have a look at the weekly. And we're going to apply a % swing chart overlay to this chart. So I'd go over here to Tools, Swings, click that, and then go down to % swing chart overlay. Now click anywhere on the chart, and that displays your % swing chart overlay. If you want to see the properties of this overlay, we can go over here to the control panel, and we look over here. It says bar 3% 5. Now what does that mean? What we're looking for with these settings is each swing, so each section that we see here, like this section here, this downward swing, is going to be at least 3 bars in duration of time. Okay, so that's a time parameter, 3 bars. If it's less than 3 bars, it's not going to register. So besides the time element, we also have a price element, which is the percentage of change, which in this case is 5%. What that means is that you're not going to have another leg register until it goes 5% in the opposite direction. Now, the reason that we're talking about the % swing overlay here is as we go forward and we start to look for patterns on the chart, this is one of the foundational tools for those of you that have an interest in programming and looking for patterns with technology. This is one of the tools that you'll be using a lot, and it's important that we understand the time and the price concepts in the application of this tool. So we have a time and a price criteria for the % swing chart overlay. And like I mentioned, we're currently on an upswing. If we focus in on this one here, this most recent upswing, it's we have the up plotted as green and the downward ones as red. But we're currently in an upswing. At what point are we expecting to see a red line pointing down, giving us a new downswing? Well, if we go over here to the control panel, and we look over here and it says swing turn marker. If we turn this on, it gives us a number here, 5767. So what this number is telling us is that if the market goes down and hits this number and or stays below this number, and at the same time is at least 3 bars in length, Then we'll plot a new line moving down. So what this does for us, it identifies significant levels of support and resistance. To make it even more clear, if we put more data on the chart here, if you press this button up here in the right-hand corner, it's called the structure panel. And this is really quite a useful area of the screen, because what it enables us to do is turn on and off different technical methods that we're using on the screen here. So for an example, if you wanted to just look at the percent swing chart overlay and you wanted to ignore the price data behind it, notice it says layer FTSE. If you just hover your cursor over here, it makes all the FTSE data go yellow, so you know that that is definitely what you're interested in highlighting here. And if you click the eye, watch this. Click the eye, and now you can't see the FTSE data, but you can clearly see where the significant highs and lows are based on the percent swing chart overlay. And likewise, if you want to turn the FTSE data back on, there it is, and you simply want to just look at the bar chart and not see this percent swing chart overlay, you can click the eye here. Once again, it highlights yellow if you just hover over it, and you click the eye and boom, that's gone now. So the good thing about the structure panel is that I can have 100 different technical tools displayed on the chart, and I can highlight them and turn them on and off at will like this, which is really nice. If you've ever used Photoshop, it's a very similar process. There's a number of different layers that you can use in graphical design, and that's what's being used here on the price chart, which is a very useful way to look at things. As we start to apply more and more technical methods to our charts, it can get very cluttered and you can't see what's going on. So to be able to turn things on and off like this in the structure panel, it's really nice. So back to our swing chart overlay, we can change the number of bars or their percentages. So for an example over here, here's the percent is set at 5. If we change it to 4, not much change there. Let's go to 20. Okay, so big change there. If we jump from 5 to 20, we can see this is a very different percentage change that we're looking at. So right now, the number down here is 48.84. That means if the market goes down to 48.84 and is at least 3 bars in length, as it says here, bars 3%, 20, that's going to register another red line going down. So let's go back here and change this back to 5. And I'm going to zoom in on a section here just so it's clear as to how these highs and lows are registered. I'm going to turn on something called the training mode, which is a nice feature. So right over here, click training mode. And I'm going to go backwards in time. So it's going to subtract bar by bar. We go backwards here. And there's just this one little interesting area where you notice that the swing did not choose the low here. And there's a reason for that. So let's have a look. And so basically it's saying if the market rallies up to 51.43 and it's at least 3 bars in length, we'll register a new upswing. So let's add a bar. Let's keep adding bars until we see that. Okay, so there we have it. We've added this bar. It's registered a new swing high. So it's at least 3 bars. We count back 1, 2, 3. It's at least 3 bars, and it went up and hit our price target. So now it's saying if it goes down to 5029 and it's at least 3 bars in length, then it's going to register a new low. Let's add some more bars. Okay, we've gone down and made a new low, and it's hit our number, but it's not registering. Why is that? It's because we've got this thing set to 3 bars. Each swing has to be at least 3 bars. Let's add some more. Okay, well that's a 3-bar swing. Don't we count that? No, because this 3rd bar is not making a low. The 2nd bar is. So if we're going to plot these, this swing chart overlay is picking off the highs and the lows. You You can see that rhythm that we got going on here. So this swing low is only 2 bars. It's not going to count it. So as we continue to add bars, you can see it completely ignores this because it was only a 2-bar swing. And as we add more bars, we can see that this happens. Okay, so it keeps on going up. And now we look at this and we say, this really was the low. I really do believe that this is the low. So why is it picking that? Like, as we mentioned, we can change the number of bars to a number that's either smaller or higher to choose this low. So for an example, if we go over here and change the properties on the bars to say 2 or 1, there we go. If we set the swing number of bars in a swing to 1, it picks off that low fine. As we zoom in here, we can see it really, the time element is irrelevant now because it's picking off percentages, a 5% change, even with a single bar. So you're getting all kinds of noise here. And this doesn't serve us if it's set to a low number like that. We need to choose a higher number to ignore this noise and to just simply pick from this high to this low. So we can either go to a smaller time frame in the properties here for the number of bars, or we can go to a larger number. So watch this. I'm going to change the bars from 1 to 2 to 3 to 4 to 5. Boom, there you have it. So now with this number set to 5, each swing has to be a minimum of 5 bars and a price change of at least 5%. With that in mind, we look at this number here once again, 54.97. If the market comes down and we have a swing of at least 5 bars and it hits this number, then it will register a new swing down. So this tool can be very useful for identifying levels of support and resistance. If you're head and shoulders trader, you'd look at this nice little inverse head and shoulders over here, and it's very apparent when we just show the percent swing chart overlay. There's the left shoulder, the head, the right shoulder, and if we drew a trend line there, there's the break of the neckline. Nice little trade we got going on. When we start looking for patterns, the percent swing chart overlay can assist us in finding patterns like this inverse head and shoulders by applying the significant swings on the chart for us and making it easier to find those patterns. So if we just turned off the percent swing chart overlay, we might not readily see this, but if we turn it on, it becomes quite apparent, especially if you turn off the bars. The discussion of the percent swing chart overlay will make a lot more sense when we look at how to scan for Gartley patterns automatically. It's very important that you understand how the software finds the significant highs and lows to find patterns. So that's how we apply the percent swing chart overlay to our chart. Open up this workbook called Forex. In here on the right is a daily chart of the euro dollar. Maximize the chart here. And zoom in here on this retracement area. Looks like we had a rally and then a retracement. So sometimes when we're looking to apply the retracement tool, the percent swing chart overlay can help us. I've saved the percent swing chart overlay up here as on the toolbar. Click that, click anywhere in the chart, and boom, it quickly identifies like significant highs and lows. So when we go ahead to apply our retracement tool, I don't have to look and strain my eyes to try and figure out where the low is here. I can see that this is the lowest low of these 3 lows because the percent swing chart overlay has identified this as the low. Okay, so to apply the price retracement, we go to Tools, go here to Levels, and we go to price retracements. Okay, so if I'm looking for what's called an internal price retracement, in this general area here, I would click the low, and I would click the high, and then I can drag these lines across like this. Click one more time, and it's there. If you want the cursor to stick to the highs and the lows, for an example, so you can see it with the crosshairs, see how it kind of sticks to the highs or the lows like that, you can turn on this lock, and that will lock the cursor to the price, which is nice. So just leave that on if you're trying to find those highs and lows. Okay, so I have displayed here the 61.8% retracement and the 78.6% retracement. We can see that there was nice levels of support here. The settings for our retracements can be found over here under Control Panel. By default, if you haven't selected the retracements, you'll just have the settings for your charts here. We have to select our retracement tool on the screen here. You can see the yellow dots show it's selected. Select it like that, left click it, and then we have the properties over here. So we can extend the lines left, right, line type, width, etc. I put the width a little bit bigger, so normally I have it smaller, but I want you to be able to see the lines. Show prices, show percentages, and this is probably the most important one, levels. So we click levels, and we can choose. Remember I said that by default, some of the numbers that we derive from Kepler's triangle are not going to be found here. So under level 2, we're going to change this to 48.6. Check it off like this, and now we have all the levels displayed if you want to have them all visible like that. Nice bounce off the 48.6, 78.6. We can see these numbers really do work. Remember Gann mentioned 50% and 75% being the important levels, and we can see that they definitely are in this chart. So if you want to get rid of some of these levels, all you have to do is select the particular level, like this one here, 38.2%, right click, go here to the garbage can, say I want to remove the selected level, left click, boom, it's gone. You want to get rid of this one here, 61.8, left click it, right, garbage can, remove selected level. There you got it. You got the ones that you care about are on the chart now. If you want to choose certain levels to be the default, let's say for an example, let's get rid of this one here, delete selected level, and we only want to use the 78.6% retracement, we can remove all the levels and then right click it and go over here to actions. You can save the setting as default. You can do that over here, or you can do it in the control panel over here as well. Save settings as default. So the next time that you open a chart, then only the 78.6% retracement will be displayed. So what we're looking at here are internal retracements. Okay, so this 78.6 is less than 100. Any levels that are above this line here, the 100% level, that's called an internal retracement. You can also have external retracements. So for an example, one of the numbers on our Kepler triangle was 127.2. Okay, if we add that, let's have a look. You notice that that number, that retracement is over here. We picked this low and this high, and any levels between those points are referred to as internal retracements. Anything beyond this level, the 100% level, like 127.2%, this is called an external retracement. We're not really going to cover off this type of external retracement routine in the initiate level, but I just wanted to show you the difference between internal and external in case you hear that come up. So this is how you apply price retracements to a chart. Now let's look at the price extension tool. here on the daily euro dollar chart, and we have the percent swing chart overlay, identifying significant highs and lows. And so what we're going to do now is use the price extension tool to find support and resistance. So to do that, we go over here to Tools, go to Price Extensions, and what we're going to do is just measure this range here and project it from this low here to give us an idea as to where the market's going to reverse in this area. So to measure this range, we're going to pick the low. I'm going to turn on the lock here. Choose the low. Choose the high. And our third click is going to be down here on this low. There's our third click. Then we drag the cursor across and we can see that the lines are displayed there. So basically, once the market touches this line here at 100%, that means that this leg and this leg are equal to each other in price. In addition to the 100% level on the price extension routine, we can also add other levels. So to change the levels, just simply highlight the price extension line. And we go over here, if we open up the control panel, we can see the different properties that we have available to us. Once again, we can extend the lines left and right. We can also display the anchor lines. The anchor lines are where we did our first 3 clicks. Remember the first one here, the second one here, and the third one here. Once you know what you're doing, you don't have to leave that on, so we can take those off so it's not so cluttered. But once again, we can go to levels over here. We can change the color of the lines, the thickness, etc. But what's important is that we add our values from the Kepler's triangle here. So we have 100%, 127.2%, 161.8%. We can add those or we can turn them off as well. The most common price extension level is the 100%. And I basically just leave that as the default setting on my price extension tool. So if you want to save that as a default, if you turn off those levels, just go over here, save settings as default, and every time that you use this tool, it will only show the 100% level. So we can see we have, if you're an L8 waveguide, it looks like maybe one of those A, B, C zigzag corrections terminates here at 100%. In addition to using the price extension tool, we'll look at another tool called the price expansion or the price interval tool. The price expansion tool or price interval tool is based on the idea that humans like to double things. We like to divide things in half, and we like to expand or double numbers. So for an example, if someone's speculating on a stock and it's run up from $0 to $10, and then there's a pullback, a lot of people think, okay, it's gone to 10, let's look for a double. Like, hopefully it's going to double in price, go to $20. So this is different from the price extension tool. For an example, the price extension tool would take this range here and project it from here. The price expansion or price interval tool is going to take this range from this low to this high and basically project that range from this high up going forward. So basically doubling the range right from this high. So it's another technique that we can use to plot horizontal lines to identify support and resistance. In Market Analyst, the tool is referred to as the price interval tool, and to access it, we would go to Levels, Price Interval. Okay, so let's say for an example, it works especially well on the initial impulse of a trend move. So let's say for an example, this high here, we're still on the euro dollar daily chart. From that high to this low, we click those 2 levels, and then we drag our line across here, and we can identify these doubling levels. So This range here is doubled, so we get down to here and we can see that there's definitely support at this level here before it breaks down and gets to this level. It rallies, it's interesting, almost to the tick. It finds resistance, and look at over here, resistance again over here. So we can see that these lines are all based on just simply this first move down. Let's look at another example. We could leave that on, go over here to the layers and just blank them out there. Can you see that? Go like that. We can also turn off the percent swing chart overlay. Now let's look at this range here from this high to this low. Let's do the price interval. We can do it the old-fashioned way here by going up to tools, or if we've added it to our toolbar here. Another way to access this tool is simply by right-clicking. If you go over here to this little wrench, you can choose from the most recent technical tools that you've been using. So the most recent one I've been using is the price interval. So remember, just right-click anywhere in the chart, hit the wrench, and there's your first one right there, price interval. So I left-click that, and we're good to go. So I can choose this high here, down to this low, and there's a range, and I can drag the lines across, and once again we're identifying places where the market should go down to. So we find some support here, we find resistance here. So that's how you use the price expansion tool. Another great geometric tool, but as I mentioned, what you want to do primarily is use it on the first little impulse of a new trend. So let's do it on this one here. I'll just simply right click, hit the wrench, price intervals, click the low, and I'll turn on the percent swing overlay so you can see exactly where the low is here. Click the low, click the high of the first little impulse, and drag that across, and we can see that this really worked out well, didn't it? So it's just these evenly spaced intervals displayed on the chart, and then as you can see, there's definitely some support here, resistance here, resistance here. So just another tool in our toolbox. As we go into looking at Gartley patterns, I'll show you some ways to use the price interval tool to confirm support and resistance levels. So that's how we use the price interval tool in Market Analyst. So we've covered off the tools that we'll be using in our Geometric Traders toolbox. And we're now going to use these tools to help us identify the most powerful geometric pattern of them all, the Gartley pattern. But first, let's look at the history of the pattern and how it's changed over time in the next section entitled The Man, the Myth, the Legend.